Now let's talk about China. It is caught in a tussle over trade with the West. The US and Europe are raising complaints. They claim China is overproducing and dumping goods. Today, the Chinese premier delivered a speech. Li Qiang pushed back against the Western allegations.
We should keep an open mind, work closely together, reject bloc confrontation, oppose decoupling and disconnection, maintain the stability and smoothness of industrial and supply chains, and promote trade and investment liberalization and facilitation.
Premier Li is sending a tough message to the West. Now, he is challenging their push to decouple from China. Premier Li says this will drag the world into a destructive spiral. Strong words indeed. What is Premier Li concerned about? The Western tariffs. Now, US and Europe want to restrict the flow of Chinese imports. Their biggest concerns are the Chinese electric vehicles, or EVs. There is a growing face-off over EVs. The West is keen on imposing duties on them, and the US has proposed an import duty of 100%, the EU 38%. America is far more aggressive in its approach. It is going beyond Chinese EVs. It is targeting more Chinese products, like the batteries for electric cars, supply of critical minerals, and solar cells. Each of these products now face higher import taxes. Europe tried to adopt a tougher line as well, but it has faced a fierce pushback from Beijing. This week, both sides announced they'll start negotiations. Beijing is threatening Brussels. It is issuing ultimatums. China wants the EU to drop the EV tariffs. It has even issued a deadline, the 4th of July. What if Brussels doesn't comply? Now, Chinese officials are threatening retaliation. For starters, they have European pork on their radar.
The Ministry of Commerce has legally initiated an anti-dumping investigation on imports of pork and byproducts from the European Union on June 17, 2024. According to WTO rules and China's anti-dumping regulations, it's confirmed from our preliminary investigation that the dumping is established and causes damage to domestic industries.
So the trade battle is heating up. Certainly, China is not happy. It doesn't want any trade barriers, especially at this time. China's economy is vulnerable. Economic growth has been sluggish. The Chinese premier is hoping for an improvement this year.
In the first quarter, our economic growth was 5.3% compared to last year, achieving a good beginning. In the second quarter, it is expected to continue the stability and upward trend. We have the confidence and ability to achieve the annual economic growth target of around 5%.
But the numbers tell a different story. Take real estate, for example. It is one of China's key growth engines. It accounts for 30% of China's economic activity, but the sector is not firing. Earlier this year, China tried to rescue the sector. It unveiled a stimulus package. Local governments were asked to raise money and buy up fledgling real estate projects. It was a rescue of sorts, but the plan has failed to deliver. Home prices in China continue to decline. Last month, they saw their largest drop. This is the steepest fall in close to a decade. So far, the rescue package hasn't worked. Real estate is a weak spot for China's economy, and a full recovery seems like a long shot. At this stage, Beijing doesn't want exports to suffer. Just like real estate, exports are a driver of growth too. Last year, exports accounted for almost 19% of China's economy. A trade war could hurt Chinese exports badly, and that's why Beijing is fighting these tariffs. We say these tariffs are a necessity right now. Global trade needs to be rebalanced. Consider this. China produces a third of the world's manufactured goods. Now that's more than the output of 4 nations combined: the United States, Germany, Japan, and South Korea. So this is not a level playing field. We all know the cost of being too dependent on China. The world saw the impact during the pandemic. Tariffs could help restore balance if Western nations have the will to enforce them.